Hello, everybody. We are back on stage for back-to-back PowerCasts here, and we appreciate everyone that stuck around for the last PowerCast. We know it's a Thursday. It's been a long conference, but hopefully a super productive one. My name's Jim Alderson Smith. I'm a founding principal on the market and transactions team here at Crux. I'm primarily responsible for, kind of introducing Crux as a platform, helping folks think about transferability, and then helping them actually close transactions.
My name is Katie Bays. I'm our policy and research strategist. So I focus on all of our external facing content, our analytics, the webinars that we provide. And our real focus of all of that work is trying to build transparency in the market for energy tax credits. It's not something that a lot of people think about every day, but it is a very important part of financing many of our clean energy projects and the energy transition overall.
So a quick just background for those of you that weren't here for the last panel or haven't seen anything else about Crux. We are the leading platform for the efficient finance of these transferable tax credits. Our platform really combines two different things. It's got a marketplace where buyers and sellers are essentially finding each other and learning how to transact. And then we also have transaction tools and stakeholder management tools that take you from that initial alignment of a marketplace bid all the way through to a closed transaction. We've got over $9 billion worth of credits available for sale on the platform today, and we've witnessed billions of dollars of deal activity in the market. We have hundreds of partners on the platform, and we've transacted and closed deals on solar, storage, wind, bioenergy and RNG, and advanced manufacturing. Given our proximity to the market and access to kind of granular transaction data, we're excited to present 5 fast facts on transferable tax credits. And I'm going to kick it off to Katie to get us started with fact one.
All right. So the first and probably most common question we get from a lot of people is, how big is this market? Are people really buying tax credits? How often? How much? Is the market growing? And so in 2023, we did a wide-ranging market survey of market participants, both on the buying side, the selling side, folks who participate in the market as advisors, to try to get a sense of how much deal volume actually occurred in 2023. And what we saw was that more than likely, there was something in the neighborhood of 7 to maybe as much as $9 billion of market activity, which for the very first year of transferability, we thought was a huge deal and a testament to how natural and what a good fit tax credits are for a lot of corporate buyers, whether it's part of an ESG strategy or tax management, and then also how powerful this was for project developers and manufacturers to raise capital. So when you add up our part of the market, the transferable credits or the transfers, plus what would have been the precedent sort of financing structure, something called tax equity, the overall value of the tax credits that were being sold or monetized in the market was something around maybe $30 billion last year. We think in 2024 that that could rise to between 40 and perhaps as much as $50 billion. And then forecasts kind of vary. The purple bars are kind of going forward where this market might go. And the most recent analysis done by the bank Evercore indicates that the market could exceed $100 billion by the early 2030s. So absolutely growing quickly, huge market potential. But in order to do that, we know that the market will also have to become liquid and efficient so that you can actually execute that volume of transactions.
Yeah, and so the second fact is about how this market is growing and kind of the impact of competition. So, right, we have found that competition really drives better deal outcomes, specifically for sellers. And we're showing you a chart here that shows you essentially the over and under market prices of a bilateral deal versus essentially a brokered deal. And that does not mean a brokered deal just on Crux. It means any brokered deal where you're essentially going out to the market, engaging multiple counterparties rather than just one, and seeing what the pricing, increase or decrease essentially ends up being. And so our data, and really Katie's data, has shown that any kind of broker deal is getting a 3 to 6 cent, that's not percent, that's cents on the dollar of the transaction price increase on top of bilateral deals. And so we really think that this market is going to be one that is led by platforms that allow for the easy discovery of these types of credits, that multiple buyers can come in and express their interest and really drive that pricing up.
Yeah, and to that, actually, for folks who were just here, I noticed in your last presentation with our friends at EPC Power that eight counterparties that they were had the option of working with, and so a lot of liquidity in that transaction, a lot of choices.
Yeah, and this really kind of is highlighting that as well. So one thing that we've also seen is that essentially like competition drives outcomes, and that bids or credits that get bids within 1 month essentially are more and more likely to get even more bids. So we've really seen that early interest in tax credits is an indicator for essentially continued interest in tax credits. More than half of the bids which got a bid within the first month of listing also generally received a second bid. However, we're also seeing that essentially about 70% of the bids on Crux from 2023 and 2024 have received a bid, and 40% of them have received multiple bids, really alluding to the fact that competition is driving better outcomes, that high quality credits are wanted by lots and lots of potential buyers, and that from that you are getting increased deal velocity, increased pricing overall.
And then another question that we get all the time is, how big does a credit have to be to obtain commercial interest? How big are these transactions? What kinds of credits are buyers looking for? And we as a company care about this as well from the point of view of driving greater equity in the market, because we know that historically the companies that had the best access to tax equity investment were the largest companies. And while that's still true, larger companies do tend to have more commercial options. What we really observed in the market last year, and this trend has continued in 2024, is that there's a huge proportion of this market made up of by smaller companies. So in our analysis, about 80% of the transactions that we observed, not just on Crux, but in the market broadly, last year were for deals under $50 million. So $50 million is still a lot of money, but it really represents a huge community of projects and companies which did not historically have access to this kind of capital. So again, your deal can get very, very large. The largest deal we saw last year was over $500 million, but the number of smaller deals is the preponderance of the market. And then and then we wanted to touch on too, kind of the technology, the composition of technologies that make up the supply of tax credits. And what this figure really shows you is that, buyers are expressing interest in a lot of the familiar technologies to them. Wind, solar, and storage make up the majority of the buy side interest. But there's also lots of new technology categories or newly eligible technology categories that buyers are bidding on. So that's bioenergy, fuel cells are up there. Advanced manufacturing, as Jim has mentioned, is hugely popular. So there are these technologies and projects which had not historically had access to tax credits at all. They weren't eligible for them, but now are. And the buyer interest is certainly flowing towards those kinds of projects as well.
So I'm going to spend a little bit more time here because historically, when we've talked to folks, the thing that a lot of people want to know about is where is my credit going to price in the market? And so we're going to go through a number of different categories that we have, and we'll start kind of with the credits that are pricing a bit on the lower end and go up to the credits that are pricing a bit on the higher end of the spectrum. Overall, I've seen bids on Crux for as low as 65 cents, and we've seen bids on Crux go up to 96, potentially 97 cents. But we really think that the universe of pricing exists within a range of about 70 cents to about 95 cents. And so breaking that down, if you look at the first category, these are kind of two types of credits. They are novel technologies. And what I mean by that is not a novel category, as in this is not advanced manufacturing. This is not renewable natural gas. This is someone who is building out, a system with a new integrated photovoltaic, or potentially something like electrochromic windows from a newer manufacturer that are getting ITCs. Also in this category are credits that are below $5 million. And those price a little bit lower because they are unlikely to have extremely strong balance sheets behind them. And they are unlikely, or it's more difficult to be able to get insurance. And so we're seeing the range on this category is really 70 to 91 cents with an 83-cent average. It's really showing you again that stuff in the 70s is more unlikely. It's really new technologies and really, really small credits. But that's kind of category one. Category two here is we're looking at stuff that's really between $5 million and $25 million. And it's from a developer that doesn't have an investment grade sponsor or guarantor, but they've got, and maybe they're a little bit newer to the market. This isn't their first project, but they don't have an enormous track record. They haven't done things in the hundreds of megawatts to gigawatt scale. And so they're really pricing more like 84 to 92 cents with an 87-cent average. So we're still hanging out mostly in kind of the in the high 80s range here. The next category we're really looking at is smaller credits that are developed by experienced counterparties. So one factor that is generally true in the pricing of tax credits is that increased size of the transaction yields bigger pricing. But another factor is also the credit quality and experience of the sponsor. So these are the, essentially credit categories on the next two ones that are from more experienced sponsors, but still potentially on a bit of the smaller side of the total credit. And then if we move all the way over to kind of the premium category, this is really looking at 93 to 95 cents. We just completed a transaction at 96 cents from an investment grade counterparty at about $50 million in that category. We're seeing a 94-cent average. These are generally the advanced manufacturing PTCs, the wind PTCs, the extremely, extremely strong developers of solar ITCs and those sorts of things. These types of credits have a couple of unique factors. They are generally, as I talked about in the previous panel, right, what we call highly transactable supply. The deals get done extremely quickly. They can get done in as little as a few weeks, and the pricing is really on the premium end of the spectrum. With all of this stuff, by the way, we can get even more granular. So if anybody ever in the audience wants to talk to Crux and ask us to price out a specific, credit or a specific situation, we're always happy to do that.
Yeah. And I just want to highlight it's a lot of detail, but the reason that we think this is so important is because it is very difficult for folks approaching the market without the benefit of this level of transparency to know if you're getting a good deal or not. Right. And so, like to Jim's offer, that while there are a lot of factors that influence what makes up the price of a deal, it's so important to build this market to have that level of transparency. And we, in the last, I guess our last fast fact is with respect to market expectations. What do the folks on the buying side and the selling side, what do the advisors in this market expect it to do going forward? And basically everyone, about 70% of the folks that we talk to in our market research expect that the market is going to grow in 2024. And so far we have certainly observed that that is true. Crux has already seen about $2 billion worth of commercial interest in credits on our platform. And not all of that will turn into a closed deal. It would be great if it did, but there are many.
Try.
Jim will try very, very hard to close every last one of those. But there are lots of reasons that deals can break up too. So what we're seeing is a lot of excitement and interest, a lot of potential for growth. Then in order to do that, and in order for the market to grow quickly and efficiently, like so many of the folks we work with and speak with expect it to, it really has to be transparent. There has to be more and better standardization around different processes, whether it's due diligence or negotiation of a deal contract. Like these are parts of the process where, without the benefit of a partner like Crux, it can be difficult, again, to know what's fair, to know what's standard. And so this is a space where we've worked very hard to try to synthesize, neutral and accessible documentation and process to make this a more transactable market for everyone, a fair market for everyone. With that, we're very excited as well because we are partnered with ACP for the purpose of this conference and for the next
60
foreseeable
days.
future.
Yeah.
So maybe Jim could talk a little bit about what that means.
Just for the next 60 days, especially if you want to scan this QR code to learn more and you guys have credits that you would like to post on the platform, you're going to get access to discounted transaction fees on Crux as a partner and specifically exclusive to ACP members. Again, would love to meet with any of you that is interested in learning more about this market, getting you those discounted transaction fees. We don't actually make any money until a deal is closed. So this is a discount discounted fee, not on an upfront payment, but a discounted fee essentially on what you would pay if we manage to close a deal, which we are getting quite good at. And so thank you everybody very much. And we're really excited to be partnered with ACP and really excited to work with as many of you as we can.
Thank you.